What's going on, folks? I hope you are as excited as I am. We're back, baby. What it do, baby? You know, Skip Bayless gif. Have you ever seen that one? I hope you have. Look, this is... You need to see this. You need to see this, folks. I am back. What it do, baby? That's right. So that's how we're starting this. We're talking about earnings for the week of April 18th. I hope you're excited. I hope I queued that up for you. Don't worry. Preloaded it. I assure you that wasn't runtime. There's a lot going on this week. It's a mix of financials and a mix of some big companies, and I hope you're excited. We're going to talk about... I've got three main focus stocks, but obviously we'll be talking about every other company in here as well. The ones we know a little bit more about, we'll give you some insights on. So I hope you're excited. Tell me what companies you're interested in the comments below. I'll tell you what I'm interested in, obviously, as we go through here. So let's get cracking. Monday starts off with a very financial heavy day. I mean, it's all financials. You see Bank of America, Charles Schwab, BNY Mellon, Synchrony Financial, Sci-Fi, and Guaranteed Bank and Trust. All financials reporting here. A couple of ones I like to look at. Well, Bank of America. So there's a lot to think about with Bank of America. One thing you can consider, well, Bank of America, not necessarily in this quarter, but preceding quarters, what do rising mortgage rates look like for Bank of America, right? Could be significant for them. One thing that impacts Bank of America as well is through Merrill Lynch, and you'll see it with Charles Schwab as well. Investment assets have fallen quite a bit over the last couple months because of this massive dip. The issue with people is it's a terrible psychology you'll see in the stock market. When everything's going down, everyone keeps selling to keep making it go down. No one understands that when it goes down, it's not the end of the world and it will bounce back up. So instead, they continue to sell and they keep their money out of the game because they're going to wait for a quote-unquote more of a dip, and then they'll put their money back in. It never works. That's how you lose money, folks. Just, come on, keep buying more. You don't need to worry about selling unless you're really comfortable with what that share price looks like when you're selling. So Charles Schwab, Bank of America, investment assets, going to be a questionable one. But the other one's financials. Synchrony, I do have a concern here with credit spend. I think overall we've seen, now that the average annualized household savings rate has kind of leveled out from where it was pre-stimulus, people have spent all their money. So there's definitely less shopping going on than there was in 2021. People were shopping like crazy in 2021. So I don't think credit spend is going to be necessarily much higher on a comp level than you look at 2021. It's a tough year for them. So just going to preface it with that. After close, that's right, folks, J.B. Hunt, First National Bank, Lakeland Industries, Service First Bank, sorry, it's rough, Pinnacle Financial Partners, First Bank, there's a lot of everything's First Bank, I'm telling you, National Bank Holdings, Bank of Hope, Tough Built, ooh, that's nice, love Tough Built, and Equity Lifestyle Properties. A lot of financials in here yet again. Most of these fall in line, except for some of these regional, local banks. It's hard to really pinpoint. If you don't know what they look like, what the areas they're in, you can't really pinpoint what they're doing. But if you're around one of these, I say it's all for it, folks. Tuesday, before open, we've got Halliburton. Fun stuff. Then Johnson & Johnson. A lot to talk about with Johnson & Johnson. They've had a lot of money come their way over the last couple of years when you're talking about the COVID vaccine. Now, these companies, including Pfizer, Moderna, they're trying to churn out variant-specific shots. They're trying to churn out vaccines that include COVID and flu in the same dose. They're trying to do everything they can to continue that government money going because the government just funds Big Pharma. It's how it goes, okay? Despite a party saying they're going to lower drug prices, this, that, and that, or the other, they're going to lie to you and they're gonna really have big pharma right in their back pockets. Okay, really big pharma's got them in the pockets. I mean, it's crazy. So it's gonna be a tough one. They're overall. I care more about Johnson & Johnson for just the general consumer staples side, the consumer goods that they sell. Really solid business that's going nowhere. Obviously, the pharmaceutical side could see a little bit of an impact solely because of less people are getting vaccinated, okay? And these boosters, I mean, Johnson & Johnson doesn't partake necessarily, but, not necessarily the kind of, prevalence they're really looking for. So Lockheed Martin following them, very relevant to how government spending looks like in terms of defense. You'll see a lot of things going on, obviously, with tension over in Europe. Potential of a little bit more spend here. I haven't seen any budgetary, really, differences that we've seen from a national defense standpoint. Obviously, it's going to be lesser. It kind of depends on who's in office, but for the most part, when someone on the right's in office, you're going to see more spending towards military. Therefore, Lockheed Martin tends to benefit. Someone on the left is in office, you're going to see less spending towards the military. Therefore, Lockheed Martin doesn't necessarily benefit. So, there we go. Silvergate following them. Hasbro. I don't really follow Hasbro. Okay, they make board games, and now they make digitized board games too. Not the most exciting company out there. In fact, probably one of the most boring companies out there. I don't like board games, folks. I really don't. They make me bored. I mean, no pun intended. Maybe a pun intended, but that's okay. Truist. Then we have none other than Travelers Insurance. Travelers Insurance. It's insurance, folks. There's nothing crazy about insurance, no matter what time we're in. Nothing crazy about them. Prologis and Fifth Third Bank. That's the most confusing thing ever. Fifth Third Bank? I mean, I'm sure it's probably on the corner of 5th and 3rd. I don't know. How can you be 5th and 3rd? It's these kids nowadays. Everyone wins a trophy, okay? Might as well be first while you're at it. That's why everyone's first. That's why they're all first banks. I just figured it out. After close Tuesday, we're starting off with a banger, and it's Netflix. Netflix after close. Why did I bring up Netflix? Well, you look at the stock, and it's been schmammered year to date. Down 42% just this year, 43% really just this year. That's terrible. Terrible performance. What do we look for in Netflix earnings? Well, this is a stock trading pretty darn cheap right now in terms of a valuation standpoint. They've never historically traded this low. They never have. What do the earnings look like? I expect the $2.90 of EPS, which is less than a year ago by a good margin. On the full year, expected to do less than they did a year ago. And this isn't shocking. You're going to see a lot more content spend from Netflix. They have to do this, okay? I'm sorry. That's rough. You hate to see it. I'm dying out here. But, what I care more about, obviously, when you look at Netflix, the EPS line, not as crazy for me. As long as they're making profit, I think it's pretty good for them, okay? You care more about the sales line here. 10% expected growth, not all that crazy, right? It's still double-digit growth, but I have to be honest with you. You're talking about a company that's not even making $10 billion a quarter annually. You'd expect to see a little bit faster in terms of growth rate, but there's a lot of reasons why. Obviously, we see Netflix has raised their subscription price. That obviously impacts their bottom line to where you're going to see a more profitability ideally, but it kind of pays for some of that content they're paying for. But it also impacts subscriber gain. It really has a slight impact. The people who are already subscribed, you're not going to see much of a difference there. They're going to stay even if you raise the price $1. But to newcomers, maybe not. That's why really what matters for this company, and it always has been, it's subscriber numbers, and they've been declining in amount of subscribers gained pretty consistently. Expected 2.5 for this quarter, 2.5 million ads. The consensus was 4. The year prior was 4. It came in, it's just kind of weak. It's just kind of a weak number. So if they're able to smash that, we're talking about 3 million plus. That would be massive for them. I think it's possible, but it is tough right now when you're talking about inflation being the way it's at, people's money being tightened, it's hard to really add a new subscription service if you don't already have it. So that's kind of where I'm at from that. So that's Netflix for you. Then we have IBM, is always one that I follow. I like the company as far as the dividend that they pay. Pretty darn nice dividend, but nothing crazy with the actual financials of the company, right? Pretty boring, very boring business, I should say. Not pretty boring, very boring. Yeah. Then we have Interactive Brokers after them. Kind of what I said with Charles Schwab. It's going to be the same story. There's people are putting less money in the market right now, unfortunately, despite it being the time to buy. It's the time to buy right now, folks. It's down significantly, but no one's buying. Martin, then Hancock Whitney, Stride, Rexford Industrial, First Horizon National Corporation. Oh yeah, First Horizon, gotta love them. Pacific Western Bank. I have an idea of where they might be located. I mean, I'm just saying. And then the United Community Bank. Fun stuff. Wednesday, before open, we've got one of the biggest consumer staples out there, P&G, Procter and Gamble. You know them for a lot of reasons. It's a great company. P&G is a steady rock to a portfolio. There's nothing really to add with P&G, right? They're consistent. No matter whether we're in a recession or not, P&G will be selling their products consistently. They won't sell more or less in a recession. It's just going to be steady. That's what's great about a company like P&G. They weather any storm. ASML, that's where they talk super into the microphone. You know, isn't that what that is? Where they eat stuff in the microphone? That's pretty gross. Abbott Laboratories. Good company, like Abbott Laboratories. Obviously, the pharmaceuticals they produce, they've got quality names in Abbott Laboratories, and obviously Baby Care as well. Abbott Laboratories, pretty good. NASDAQ reporting, oh yeah, you got that right. Baker Hughes, Anthem, Lithia, Driveway, M&T Bank, Comerica, and GATX. Don't make me show you my GAT, folks. That's right. 9 mil. Oh, yeah. After close, we've got a slapper. It's a slapper. Slapper, banger, masher. I mean, they're all the same, folks. It's all... It's great. We've got Tesla. Obviously, Tesla's on here for a reason. It's Tesla. Okay, we always want to talk about Tesla. It's been having a great year, by the way. Last year has been fantastic. But if you're looking year to date, not so favorable. Down 17% for the year. Full year, obviously, up pretty high, all things considered. But still has recovered quite a bit from its lows. But at one point was seeing a big decline of really nearly 40%. So that's why we're talking about it. And what is Tesla expected? Well, they're expected a $2.26 EPS line compared to 93 cents. This company's massively growing that EPS line, and they're going to consistently do it from here on out. Concern will be in the future when we talk about recessionary environments and supply chain costs. With inflation, the cost unfortunately, these vehicles is going to go up. They're going to come back on the consumer because the parts are going to also increase in price. So that's how they're going to maintain this line here. But from a revenue standpoint, expected 71% growth, $17 billion expected versus 10.3 of a year ago. If you look at the vehicle delivery data that they've posted for the past 3 months, you know this one's going to hit. Right, this is a company that's going to be meeting these expectations and beating them, actually, just based off that vehicle data. If you do the math on it, you just can. Obviously, there's some other aspects of the company to consider, as far as Tesla insurance, as well as solar. You got to consider those aspects too. But this company is going to hit. I'm just going to say that right now. They'll be beating expectations. It's just going to happen. So stay tuned for Tesla. Alcoa, United. Lam Research, then Steel Dynamics, fun stuff, Kinder Morgan, great companies, all littered throughout here. CSX, Whirlpool. Do people buy appliances in recessionary type environments? Ooh, folks, you might want to be a little concerned if you're Whirlpool. These are pretty high quality appliances. People aren't going to be upgrading in these type of environments, and you've seen it. Companies like Home Depot, we're seeing home improvement sales as far as equipment. They've been declining. So Whirlpool might see a little world of hurt as people don't have the money they had last year to spend on all these upgrades, right? Yeah. Equifax, it's tax season, folks. Hope you're excited. I'm not. I already did my taxes, though, because I'm a good boy. And the government just continues to steal money from me, and they don't give it back. Crown Castle following them. Thursday, before open, American Airlines kind of going to set the precedent for the others that are going to be reporting next week. We're going to see Boeing and I think JetBlue, next week. But we'll see what they're able to do. American Airlines, excited to see it. We're seeing really one main thing is incredible demand built up, and finally people are going to they're going places. So incredible demand we've seen from Carnival Cruise Lines, all of these places that are offering experiences and transportation to vacations and getaways. Incredible pent-up demand is going to be unleashed. Not necessarily this quarter, because they'll be reporting after this pent-up demand kind of kicks in, but the quarter following, I'd expect their outlook to be pretty sharp. I mean, I really do. I think the demand looks really good for them right now. And you're going to see ticket prices kind of normalize as well from where they were pre-pandemic levels. So excited about that. AT&T, boring company right now. They're a boring company when you're talking about spinning off the HBO Max unit. It's just going to be a telecom company. So AT&T, I'm out of it, folks. I'm out of this one. Don't follow it anymore. Nucor, Dow, Union Pacific. I love me some railroads. You know I do. Philip Morris. We're talking about the wacky tobacco. People will, unfortunately, partake in a lot more of the wacky tobacco when we're talking about stressful recessionary environments. Just something to throw out there. Just putting it out there. Not necessarily affecting this quarter, but it's something to think about. NextEra Energy, good company. Huntington and Danaher. After close, we have Snap Inc. Well, Snap. What do we have with Snap? That's right. We're talking about Snap today because it's been a terrible year for Snapchat. If you look since October of last year, this is a stock down 55+%. Been schmammered since October of last year. And just has seen no recovery. No recovery at all. They tried to, and then it just continued to fall. And it's been rough. Trading at some of its cheapest valuation it's ever had. And we look at the expectations of earnings. Expected a 1 cent of EPS line. Don't know what that looks like. Probably a miss, all things considered. But it's the potential to be a super high margin business. They're just not quite there yet, okay? Not quite there. But this could be the first full year of profitability for them. Pretty exciting in that aspect if you're a shareholder. But what really more important is, in my opinion, the growth expected. 44% growth expected this quarter. Expected to be over $1 billion. That's right, the first $1 billion quarter. Or second $1 billion quarter. Yeah. I think they did $1 billion last quarter, I'm pretty sure. I might be incorrect in that. I can't believe I can't remember that right now. But you know what I'm going to do is figure that out right now. Why don't I just figure that out right now? Right now? Quarterly. All right. Yeah, they did. I don't know what I'm thinking here, folks. I don't know what I'm thinking here. They did 1.2, which makes sense Q4. But yeah, Q1 in comparison, it's the first Q1 that's going to be $1 billion. They even hit, even Q3 last year was $1 billion. I failed you. But that's the main goal, is going to be the growth there. What ad rates look like, I think they're actually looking really good. But people are really going to care about more users, folks. They want more and more. They want more users. So excited to see what they're able to do with Reels and kind of how many people that dragged in. So keep an eye on Snapchat earnings. The stock could pop easily 10% upwards, or it could continue to fall downwards. So just keep that in mind. So definitely going to be a lot of option interest in Snapchat this week, I believe. Intuitive Surgical is a company I really do like. The unfortunate part of it is a lot of these companies got sidelined in the pandemic because they weren't able to do really elective surgery, so they weren't purchasing a lot of equipment from Intuitive Surgical. Now, we get into an environment in which money is tighter and people are doing less elective surgeries. So it also impacts them in a negative way. It's been a rough time for Intuitive Surgical. A lot of really headwinds, I guess is the best way to say it. Not many tailwinds, unfortunately. So keep that in mind going into the future with Intuitive Surgical. Not sure what to expect here. PPG, Boston Beer. Apparently it's good stuff if they got a whole company after Boston Beer. Qualtrics, good stuff. Silicon Valley Bank, more banks, folks. 4-star, they got it all. Alpine Bank, OZK, presume that's Ozark, what can I say? And then Associated Bank. The financials are going to be littered over this week and next week, just telling you right now. Then Friday before open, we've got Cliffs, Verizon. Kind of get a sneak peek from AT&T, a little bit of a sneak peek, okay? Schlumberger always reports on Friday. I swear they do. Unfortunate. American Express, really one of the most credit card, besides obviously Synchrony here, focused on credit. We'll see what Synchrony looks like. I'd kind of compare it similar to American Express, so we'll see what that looks like. But what's in your wallet? Newmont, SAP, Kimberly-Clark. I actually really like the company. Really great stuff. Great consumer goods from Kimberly-Clark. Really good stuff. Regions Bank, HCA Healthcare, and Auto Live. That's what I got for you today, folks. I hope you have a fantastic flippin' day. Happy Easter. Should have prefaced it with that. Have a good one.